Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Tiffany Sampson and I work for NinjaTrader in our Denver office. We have a very special event for you today with Kevin of ChartSpots. I would like to mention that it is important to understand that there are substantial risks in trading commodity future contracts and forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited within your broker and can even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage directly at the information provided. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive to view event recordings at the link provided. Also, if you are active on social media, please ensure that you are sure to like or follow us for the best way to get updates on all things NinjaTrader Ecosystem. NinjaTrader is always free for advanced charting, strategy backtesting, and trade stimulation. To ensure that you are on the latest version of NinjaTrader and pick up a free live data trial, please visit the following link. And if you are just getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We are very excited for this unique event in which Kevin will demonstrate how you can utilize the power of statistics and the concept of the initial balance in your trading. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Kevin. Please take it away, Kevin.
Hello traders, thanks for that intro, Tiffany. It's going to be a jam-packed session today, so let's get started. First off, of course, the disclaimer, futures and forex trading carries a substantial amount of risk and is not suitable for all investors. Past performance is not indicative of future results, and hypothetical performance results may have inherent limitations, some of which are described on this slide. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Now this is rather important for today, as we're talking about statistics which by default are based on historical data. However, we can see some trends there. So first a little bit more about me. So I've been a full-time trader in mainly the DAX since I'm based in Europe. Since 2017 I started full-time. I was involved in the markets quite a bit before that as well, but not in a full-time manner. I do also trade the E-mini ES, so the S&P 500 futures, and the Russell 2000 is also a product I frequent. Recently, or back in 2017 somewhere as well, I founded ChartSpots.com to have a platform where I can share my work, because as I was looking for certain information and statistics that I couldn't find elsewhere, I started developing my own software. So that started with certain indicators for NinjaTrader, for the NinjaTrader platform. Starting out with the initial balance was actually my first one, and throughout those years that tool has really grown a lot. I've received quite a bit of input from other traders, and it's now really flexible tool. And I also developed a software suite which processes minute data from the futures basically, and I wanted to share that work and also make that available to the general community of traders. I specialize in reading the auction process. That's something that really helped me throughout my development as a trader, to really get a good view on what is the market doing and what can I expect next given what I've seen till now. And in that context, I use the volume profile and the market profile quite extensively. And I use them mainly to identify areas of interest. I'm quite heavily focused on value-based trading IDs, for which, of course, the volume and the market profile are ideal tools. So I've put on this slide profiling is my middle name. You can actually take that quite literally. It's even that bad that I do profile my bike rides even, so that's how far that goes. If you like to follow me, you can do that on Twitter at ChartSpots, and I do have some very interesting videos on YouTube as well. You can quickly find my channel by going to chartspots.com/YouTube, which will direct you to my channel. Other contact information is on my website as well, should you want to contact me. So, moving on, because I mentioned we will have a lot to cover today. I wanted to get everyone's gray matter working. So I'm starting out with this philosophical quote that I came across recently. Society has told you a romantic lie. You do not have to work for it or pay your dues. You simply have to know the backdoor path that takes you there. So applied to financial markets and trading, I thought that was very fitting. And for me, that backdoor path that I carved for myself basically is it consists of having an edge, and for me that means trading based on a statistical edge. And that brings us what is an edge and where to find it. Ultimately, that's what today's presentation is about, and it's really quite simple. I came up with this very simple and basic definition. It simply means when you have observed that there is a greater probability of one thing happening over another. Because if you think of it about it, that's basically what you're looking for. You're looking for entering the market and having it go, or that the probability is higher that it is going in the direction of your trade rather than the other side. And that brings me to the concept of the initial balance. So this will be an integral part of the trading strategies that we will be looking at today. So what is the initial balance? It's a very simple concept. It's quite an old concept as well. Goes back many years. So it's basically the high and the low set during the first hour of trading. So why is this important? It turns out that a significant portion of the daily volume is transacted in this time frame, and it's quite clear, as you will see later on, that these two levels have a significant statistical advantage, I would say. So if you look on this chart, this is a 5-minute chart of the ES, one complete day. So the gold lines here, that's the initial balance low, and that's the initial balance high. Okay. Let's move on to some statistics. So on this chart, the chart you see, the output here is calculated using minute data from the E-mini S&P futures over a period of 3 years. So 777 sample days. Now, if we evaluate what's on there, the red slice is the important one in this case, and that simply says that in 70% of these 3 years of data, only one of the two, either the high or the low of the initial balance was broken during the session. Then the green slice is 27% probability where both sides are broken, which, if you look at the terminology of day types, would mean a neutral day. And then you have a very tiny marginal slice, which is when neither of those have been broken. So to go back one slide, the 70% means that either this line was broken or either that one, and the other one remains intact in most of those, so in 70% of the backtested cases. So how can we use this information and develop a strategy around it? That's basically what we will be covering today. So I will be using the concept of the initial balance, but also using additional statistics that will follow in the presentation. So the three trading strategies, they have varying difficulty. I will go over why and how you can adjust that to your profile basically. And they also suit different trading styles, both impatient, if you really want to get in as soon as possible, and for the more patient trader who's waiting for some more information. Both of those will have something during this presentation. So if you have any questions during the presentation, do put them in your chat box. We will get to them later. Okay, which brings us to the first one, which I call the anticipation of the initial balance break. This is the most difficult one. It's also for the most impatient trader because it means you want to act quickly. So what are the typical trade triggers for me for this to trigger this anticipation of the break? So one of them is when you see a poor high or low. What does this mean? A poor high and low is actually a term used in market profiling rather. However, you can see it on any chart. It's a very simple concept. If you take a 30-minute chart, if you have two bars within the same day, in this case for a poor low in this example, it means that you have an equal low. So on this 5-minute chart, it means that the first half an hour is 6 bars, which would be until here. And then where you see the green circle here is where the first 5 minutes of the second bar of 30 minutes actually started, and it prints an equal low. This then becomes an entry trigger because a poor low doesn't tend to stay poor. We actually had a similar case today in the ES. Then So that would be a trigger to go short in this case. You could consider going short or adding to your short as you test the IB again and go through it. So those is the case of the poor low in this example. But there are other triggers that could be used. For example, if you are seeing a weak low or high. Now what is a weak one? It basically means a similar thing. It's like a double bottom or a double top, but spanning multiple days. So let's say yesterday's low was this level. You test it again the next day. That's typically what you consider a weak reference. It means that shorter time frame traders are likely looking at that specific level and trying to get long at the low of yesterday or an overnight low, volume point of control, any visual reference basically. And that's one of the things that I like to fade actually, and that's something that this takes advantage of. Another thing you might consider is the opening range break. So personally I use time-based opening range, typically 3 minutes or 5 minutes, which in some products it works better than in other products, and additionally it works better when the volatility is higher, like we have been seeing the past few weeks. Small side note here, this screenshot was taken before the last Fed meeting when we were trading near the all-time highs, and the volatility was really low at that point in time, so that will also explain some of the things that will come up later. And then additionally you can have some contextual things, but then you're more looking at your analysis that you did pre-market, but this is maybe a bit more advanced, but not necessarily needed. You can use these concepts in quite a mechanical way. However, if you are able to determine context better, that will definitely help. Multi-day trend can also, if you've been trending down for several days, that might be something you expect, but these two things are items that come out of your analysis, let's say. If you would like to see what that would look like every day at the end of the trading session, I post at least my analysis for the DEX. There's some interesting calls in there, and if you want to learn more, have a look at my Twitter feed. There's definitely some interesting things there. So we entered the trade, we maybe added even. So where do we exit? I like to use basic prior support or resistance levels. You can look at low volume nodes, which is a volume profile term. Could be a prior volume point of control. Extension statistics, which is something we'll be covering later on as well. And the initial balance itself can also be an exit point. So what I also wanted to mention here, I kind of lost it, so let's move on to the next one. So I mentioned these extension down statistics. So this is a chart or a type of chart that in the reports that I have on the website. They're there for several ranges, let's say. So they exist for the initial balance range, for daily ranges, for extension down, extension up. Now what is an extension down? Very simple. If we look back at the prior slide, if you would calculate the extension down for this entire day, that would be this low until this initial balance low. So that's your extension range. So what does this chart actually show you? On the x-axis, so this one, it's increasing in amount of points, and on the y-axis is how many times that extension occurred. So for example, if you take this one right here, that means 6.5 points, if I saw that correctly. So the extension down covering 6.5 points, it happened 15 times in this case. So you can see some pattern emerging in this data aggregation as well. So you see that you have like this kind of distribution here, and then another one here, another one here, and then these are all outliers for basically high volatility periods like we are in right now. They go up to all the way 80 something, I can see, so that's something to take into account. But as you can see, the general bulk of these happen in a very given range, let's say. So how can you use this type of information? Let's move on to the next strategy. This one I consider medium difficulty. Since it is later in the day, you do have more information available. In this chart, I added a few new things. So let's go over them. The light blue CN kind of line that looks like a moving average, this one is actually the VWAP, that's the volume weighted average price. It's something I do keep on my charts because it tends to be something that institutions and bigger players are looking at, as obviously they're not filling 1 or 2 lots, they have to fill thousands of contracts each day, and they tend to use that measurement at the end of the day. They see where's the VWAP, and if they were buying and they averaged below that level, they consider that a good entry. So what you will see on balancing days, like this is an example, is that the market will basically oscillate around that level and hit it multiple times. It's only when you have what you call a trend day that the market tends to run away from it, but those days actually, if you look at it from a statistical point of view, they're actually quite rare. So that's not what I tend to target unless there is a clear reason to do so. So in this trade scenario or trade strategy, we're attempting to fade the initial balance break. So I noticed when I was looking at the statistics, the most common extension down was 2.5 points, so I put that line on the chart, which is this blue line here. That's just a line that I draw myself, and that happened to be the first low of the day. What I forgot to mention, I also added the mid line, which is the blue dashed line. So that's a very simple calculation. It's this line here over here. It's basically the high of the day plus the low of the day divided by 2, so the median price. There does tend to be some reaction to that level in most days. And what I have also added is a volume profile. However, I limited it to the data that is available. So I've only drawn the profile for the trades that already happened until that point. So what are the things that I find interesting as we break the initial balance low in this case? One, we have the point of control still up here. We see these multiple distributions forming, but they decrease in volume. There's no pickup in volume. Another interesting thing here is if your volume is typically average for the day, so there's not much specifically being priced in, or the volatility is not specifically higher, this relative volume indicator can be a helpful tool. So what you see here as well is that as we break the level, you see a little bit of a spike above that blue line that runs over here. Now what is that blue line? That's basically the relative volume, and what it does is, in this case it was configured to look back the past 20 sessions, and let's say at 9:30 when the market opens, the average volume for those 20 days at that specific time of the day is where the blue line is drawn. So that gives you somewhat of an indication whether volume is average and you're expecting mean reversion, or volume is significantly higher. That might change your view. For example, if this was consistently and significantly higher, I would not try to fade this breakout. Okay, so I mentioned the POC up here. Value, which is this area. What is the value area? It's basically where 70% more or less of the trades have taken place. I do tend to focus on that a lot, so when I want to go long, I try to do it below value and the other way around for a short position. So we see that value is still higher, and this could be an entry point for you. So you see no VPOC migration. You expect mean reversion because volume is completely average. Volatility is not doing anything spectacular. And most likely you're looking at a specific support or resistance level that you're interested in your analysis prior of the market opening. And of course, statistics, you can also use that. Now, obviously, with the statistics and the volatility that's there right now in the market, we're trading around 20 something. 2.5 points is not something you want to be looking at right now. So, small disclaimer there. So we get long at this arrow here, this green arrow. Now what are the trade exits for the fading? Fading the break is basically the initial balance again. So this line right here, the mid price and the VWAP are definitely targets, and the VPOC as well, so the most traded price of the day. Okay, moving on to next set of statistics. So here we're sorry, looking at the session close probabilities, again for 3 years of data. The ones I circled in or squared basically in green here. This first one is the probability of closing below the initial balance low when you have only broken one side. So in this case it's 60%, and closing below the median price, so the mid, that blue dashed line that I showed you earlier, is 67%. This one are basically the same thing, but for break to the upside, and there you see probabilities even reaching 80% or close to, and that's simply an effect of being in a bull market this entire time frame, so that has its effect, a positive one in this case. So how can we use this for our third scenario, which brings us to the break continuation. So now what has changed on the chart, I drew the volume profile until this time frame where we are about to enter the trade. I've added the 50% initial balance extension. What this is very simple. You have the initial balance range and you divide that by 2, and that's what you add to the low of this initial balance low, and then you end up with this line. This is also something in the indicator that's configurable. So what are the triggers here to enter the trade? So we just looked at the session close probabilities, and we're seeing a little bit of unusual volume. So for 15 bars or something like that, we have been going sideways with little range in the bars, nothing really happening. Then all of a sudden we see the range of the bar extend quite a bit more than before, and additionally we see some above expectation, above the relative volume, a small spike above it. So that's where we decide to try a short, because we have the statistics on our side. Now where do we exit? Of course, what I didn't mention is we still have a one-sided break, so we didn't cross the initial balance high in this case. So that's still intact as this happens, so that gives us a go for the scenario. So we go short, and then we target again the initial balance for a retest, for a first scale out, for example. We also target the prior low, so that's why I added this red line. It's also a line that can be configured in the indicator, and then ultimately we close the position at the 50% initial balance extension. So that's a very reasonable target. In the day types, for example, there's some interesting statistics on that one as well, how often that tends to happen. And basically always looking for support and resistance zones that you can target as an exit point, and that's something you can define up front, of course. So that covers the 3 basic trading strategies on the initial balance and the statistics that I wanted to cover. So how can ChartSpots.com help? So today we've seen the initial balance indicator. It does come with a lot more levels. It also has the opening range. It has several, the overnight high and lows, for example, the daily or the prior day levels as well, the prior close, things like that. All things that can help you identify poor lows or weak lows, for example. The relative volume indicator was also on the charts here. Additionally, we recently launched a gaps indicator, which is really interesting. So if you're not aware what a gap is, there's few ways to measure them. The way I use them is if you have a range of the session that you had, and then the next day you open above that range and you don't test the prior session's range, so you have a price range which basically was not traded between these 2 days during the regular trading hours. And what this indicator does, it will automatically draw these gaps, and if they're filled, remove them. And similarly, it can do the same thing for prior highs and lows of previous days. So that's also something I use quite a lot, and it saves me quite a lot of time because everything is shown automatically. Another tool that we have is the break-even line. This is basically something to help you during the trade. So what you've seen is all the strategies that I've shown you, they have scale out points. Now if you use the normal NinjaTrader trading, you will see an average price where you entered your trade, which will not move. What this break-even line indicator does is, as you scale out, it calculates how much profit you made and how far the price would need to go against your position for you to lose the profit that you banked in your first scale out. So each time you take some profit, that line moves further away from your entry position, basically, which can give you some additional confidence to wait it out and wait for your targets. So those are the main tools. The statistics, are covered for the most common products. What we've covered today is really only scratching the surface, really. I believe the last, it's on the website, but there's over 100 statistics that's in those reports. Some interesting ones that are really helpful as well is what I've called the opening scenarios. What those do is they look at where the session opens. So for example, if you open the next day, you open in a gap down, what are the odds or the probabilities that you test prior day's levels? So for example, the low or the VPOC or the value area levels. Those have some really interesting probabilities as well that can be really helpful to give you a bit of a sense of what is likely to happen in each possible scenario there is. So I believe there we cover 6 of them, and they're all looking at value or the prior range, things like that. So analysis of the markets, the most important one is Twitter, where I post daily my my analysis for the day and my preparation for the next day. Typically for the DAX, but I do also post on the S&P. On my YouTube channel you can find some additional videos on volatility, for example. I have also a very recently published a video about weak and poor highs and lows, how you can detect them easily. And I'm always up for a chat, so you can drop me an email here or use the form on the website. And as a special announcement for this webinar, there is an exclusive deal which is valid for 1 week. There are basically 2 deals that are active right now. You can get a lifetime license on all the indicators that we offer, including 1 free statistics report that you can choose. Or if you like to pick and choose, you can also use another code that gives you 25% off any order. You cannot combine them, and the details and the codes, you can find them on chartspots.com/webinar. And that concludes the presentation. I will now go through the questions that came in during the presentation. If you still have some, do post them in the chat box. I see the first one. This is from market open at 9:30. So yes, in the examples that I use, the yellow line basically keeps tracking from 9:30 till 10:30 in the US time frame. And when that time stops, it stops tracking the high and the low. For the European markets, for the DAX for example, I do use 2 hours, but that's because the futures open was at 8, but the equities only open at 9. However, since late last year, they're also trading during the Asian hours, but I'm still using the 2-hour IB, but the main part is when the equities open the first hour. Will this webinar be available later for review? I suppose yes. The NinjaTrader will be publishing it later on. Solo entiendo español. I'm sorry. I do visit Spain sometimes and I really like the country, but I'm not that fluent. But I guess that means you only understand Spanish, which probably wasn't a good thing then. What period is your VWAP? Is it 20 periods? The VWAP doesn't really work with a period. What it does is it takes, or it looks what the average price was if you, the simple formula is you take the amount of volume that occurred at a certain price level and you multiply these values, and you do that for every price level, and then you divide that between the amount of contracts that were traded. So it's what it says. It's a volume weighted average price. So it doesn't work with time frame. It's really purely based on volume. What IB range do you use for the DAX? So I briefly covered that. So if you look at the German time frame, I still use from 8 till 10. However, I often receive this question of people who purchased the report, and I have also calculated the statistics for the 9 to 10 time frame. What I've seen, because I did it last week, I believe, for someone, It tends to produce a few more neutral days, but statistically speaking there wasn't much of a difference. Obviously your ranges will be a little bit different, but nothing that important that I saw. The main thing was that if you use from the 9 to 10 time frame, so when the underlying equities have been open for the first hour, they tend to produce a couple percent more neutral days, but it's not really significant. Is that cyan line the VWAP? Indeed, so this one is the VWAP line, and the dashed one, that's the mid or the median price of the day. And you see that it tracks slower. For example, when a new low is created, it calculates the new mid price. Okay. How do the indicators show on a chart? Please show an example. Well, this is basically how they show on the chart. This is simply I've added the initial balance indicator, and that indicator specifically is drawing the initial balance high, the low, this red line for the low of the day. It's drawing this mid line, and for the relative volume, that's also just simply added with a configuration of 20, and that line here is configuration, which color you want, things like that. Oh, I see one more question here. Have you looked at the 15-minute initial balance instead? I've actually done that as well. I've looked at several time frames, and what I found, for example, for the German one, I also looked at 8 to 9, so before the equities are open. I've looked at shorter time frames like you suggesting, sorry. And what I found is a high, or a very, in some cases, very high probability of going neutral. And for me, that basically removes the statistical edge that's there. So what I am still looking at, but that development is not finished yet, and that's the opening range, where I'm looking at time-based ones and how that can be used. That's something I intend to launch at some point, but I'm still working on that one when I have the time for it. So that may be something to look out for. Okay, I think those were all the questions. I'd like to thank you for your attention, and if you have any further questions, you can still contact me via the website or via Twitter, however you want. So thank you for your time, and hope to see you again in the future. Goodbye.
Perfect. I would like to give a special thank you to Kevin for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event. Please keep an eye out for this email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you will attend them on a regular basis. We would like to remind you the information provided in this was that of ChartSpots and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And thank you again, Kevin.